Okay, so let's start with GU. Okay, on 15-minute time frame, let's convert to your time frame now, which is UTC plus 8, right? So this one here, UTC plus 8. Now, okay, so the Friday one, at what time did your did on 26th of August? The market opened at 3 a.m., right? London open. 3 p.m., right?
3 p.m. Yes, 3 p.m.
Okay, London open at 3 p.m. All right. So this is London open and overnight session. So let's mark it as 3 p.m. Now just see what I do. Okay. Now you have to do is the exact same thing which I'm doing right now in the video. Just follow it. Okay. If I'm writing London open, you have to write down the London open. Okay. What do? You just draw the structure. You don't mark it. Okay. And this makes things a little bit complicated. If you mark it, it will make things easier for you. Got it?
Yep.
So London open. All right. So you mark London open. The second step, what you need to do, you need to go back and see where did your overnight session start. The overnight session start 3 a.m. your time, which is 3 a.m. You go back, should be 26 August, 3 a.m. Okay. Here. Okay, 3 a.m. This is overnight session start, right?
Yep.
Okay. You have to write it down. The next step is to find the highs and lows. Okay. So the best way to find highs and lows, all right. The best way to find the high and low, okay, you have to find the overnight high and overnight low of the overnight range between overnight session start and London open, right? So this is the entire range, okay? This is the entire range between overnight session start and London open. So you have to mark down the highest swing high and the highest swing low between this range. Am I right? So
Yep.
how are you going to do that? Okay, so let's use the indicator and let's remove the discretionary. Okay, this discretion, just be rule-based trader. Okay, so according to rules, what I use is pivot high, pivot low, pivot high and low, pivot high and low. Okay, you will see these readings over here. You go pivot HL. Okay, so just write down pivot high and low. Okay, on the search bar, you will find this one. Okay, go to settings of this indicator. Select here 3 and 3, 3 and 3, because we need 3 minimum points. Okay. So can you tell me the highest swing high here? This one, right? And the lowest one, this one, right? This one is not a swing high. This one is not a swing low. Remember that. If you mark this as swing low, it will be incorrect. Okay.
Yep.
So, okay. So this is the lowest swing low. With the help of indicator, you can find it. You can draw the line. Just draw it. Press shift. Shift will make the line straight. Okay. You hold shift and do it. Sorry. Extend it all the way between London high and London open. From here to here. London open. Shift. Okay. Now just clone it. Just clone it from here, clone, and move it to the highest point, which is right over here. Okay. Just a little bit higher. Okay. Now move back to the. Now just remove this. Okay. All right. Now this is what?
Overnight high.
Okay, you just mark it overnight high. On the text, you can edit it, make it to the top side, center. Okay, okay. And then double click it. You'll go to style, you go to text one, write down overnight low, select the size which you want, the color. Okay, it's according to you, bottom, center. All right, overnight low. Now you have all the tools now. So the first thing on the 15-minute time frame, you need to determine first thing. What is the bias? Once the price. Now this overnight high and low is known as, this hole is known as overnight high and low. The area between overnight high and low is known as overnight range. Got it?
Yeah.
So this is known as overnight range. Now you have to identify how the price, okay, what is the bias? What is the bias of the market when the price is entering the overnight range? So you have to check this bias here. Okay, you have to check this bias. Does it make sense to you? What kind of bias is this?
I think I took this one as bullish.
Bullish bias?
Yeah.
Okay. And
The price is entering on overnight high.
yeah. So if we highlighted the bullish bias, you would need to draw the channel, right? So if I draw the channel from here to here, okay, identify it from here to here, okay, because this is the first highest and this should be the second. You draw the channel from here to here, right? The price is entering. You see a sudden acceleration to the downside here. So this is, of course, you see this kind of
I
move
think
here.
the bottom line there is should be slightly higher up, I think.
Sorry.
You are joining the two swing highs on the left side, right?
Oh, yeah. Sorry. This
Yeah.
one here, right?
So now it's oversold. Yeah.
Yes, correct. Yes, I'm joining this too. Sorry. So this would be what?
Oversold.
If this is oversold here, plus selling climb. This is what you did, right?
Yeah.
And this one should be AR, right?
Yeah, correct.
Okay, so you draw the range here, from here to here, from here, riding all the way back up. Okay, and then what else do you need for this one chart? The price goes back here. This is bullish. Okay, and then within the bullish, what happens? The price enters this range. So between overnight high and low, low and high, the price is bullish. Am I right?
Yes.
Okay, between overnight range, there's a bullish bias. So you write it down. Bullish bias between overnight range. Okay.
Yeah.
Okay, between overnight range. Overnight low to overnight high. Okay. Then your London opens here. Okay. You want to draw the channel here. How would you draw? If this is a major swing point here, the higher one, this should be the lower point. You can draw within now. The second step is you need to draw the structure between the overnight high and low to determine the immediate bias. So this is the first swing high, equal swing high, right? So this can be, so this is the lower high, right? Swing high,
Yes.
lower high, right? So lower high, you cannot take this. These are equal highs, but obviously it makes sense to take this one, right? Okay.
Yes.
You draw the channel from here to here, join it, clone it. Okay. Now I will make it a little bit dotted just to identify that this is immediate bias. Okay. So this one, and immediate bias. Now we have a clear structure that before London Open, what happened? The price became what?
Oversold.
Oversold. This information, you must keep the information in mind. Selling climax. Okay. Now we go back to the 3-minute chart. Okay. This one is secondary test. Now After secondary test, the price is going up. So this kind of structure between overnight high and low is actually reaccumulation. Am I right?
Yeah.
Right, makes sense, right? This is the reaccumulation here. Now we are in the reaccumulation range. All right, now what happens? London opens now. Okay, 5 minutes. If you want to refine anything, you can refine on 5 minutes. I think the line should be moved like this and just it. That's it. Refined. Okay. Now London opens right over here. Let's make it dashed line with blue color. Or maybe green color. Okay, dashed line with green color. Okay, now it's more better now. Okay, so what did you see now? We have an oversold. London opens here. Okay, when you have an oversold here, you're gonna draw the market here. So go to the 3-minute time frame, look for the entries on a 3-minute time frame. Okay, after refining on 5 minutes. So what did you see? This is oversold. If this is oversold, okay, we need to find the oversold and AR. So we need to draw the line, this first line over here. Okay, first line. AR would be basically this one here at the top. Okay, AR oversold plus selling climax. Sorry. Do you understand what I'm doing here?
Yeah.
Okay, so we have AR here. Okay, and AR, then where this is secondary test. Okay, from a secondary test has what characteristics?
Higher low.
Higher low. Okay, so essentially when we have a higher low, we can draw another line from here. Now the problem with this is we do not have any entry over here. Do we have here? No, no entries. Do we have no entries? Okay, but as we know that on a 3-minute time frame, okay, the price is moving up here. The price is moving up here. You can see the price is making a channel. Okay, higher lows, higher lows, higher lows, and higher highs, right? So this is the first higher low. This is low, first higher low, right? We can draw the channel from here to here if you want, just a short-term channel. Okay, on a 3-minute time frame, you can draw the channel. If you see the channel, you can draw it, right? And then you can just extend it over here. So you can see from here on a 3-minute time frame what happened. The price reached what?
Overbought.
Overbought. You can see the volume as well. Overbought. And then the test of this one. Test on which part here? Test of overbought. Coming on the same reference line, right? And this test is coming on what? On this reference line plus this channel line, the broad channel which you draw, right? And it also comes on this reference line. All three confluence. Am I right?
Yeah.
Okay, so this is a very good entry. Now, this entry does not mean that you will go long. Your bias is still long. Remember that. Your immediate bias and your long-term bias still long. But as you know, when the price react to this level and you have all of the, like you have a mini overbought here. Okay, you know that the price can go back mini overbought plus buying climax. Okay, we have here, and we have a test here, no demand, right? No demand test. The price can react and go back and test this level again. Am I right? So we can take a short trade right over here, very short-term trade. Stop loss here. That's one of the first trade of London Open. Okay, all right. So 2.69 hour. Any question?
No.
So the question is, so my part is, if you can see the structure on a 3-minute time frame as well, you draw it for a very short-term entry. Now, what is the idea? The idea is that our trend, our bias is long. Am I right? Our long-term bias and our immediate bias is long. But we know that the price will test this region and will come back to this region to test it. Am I right? Secondary test level. And then from here, the price has a potential to reverse, right?
Yeah.
So can't we take this short-term trade here? You tell me. And exit over here?
Yes.
right? Very simple. We did the same thing. Okay. Okay, all right. Stop
You
loss,
can draw
short-term
the
trade.
channel as long as there is two swing points, is it?
Yes.
Should I like take a very far distance kind of swing point, or like a short swing points is
This one?
fine? Um you start drawing the channel from the
This one?
test. Yeah,
Yeah, this is the swing
because like
point here.
I understand,
This is
but
one. Okay, so this is low, higher low, higher low, low. Okay, sorry. Higher low. This one, this is low. Okay. This low is higher, this low is higher, this low is higher, higher. So this swing low is higher than these 2 points, right? It's the lowest point between last two and last two. Got it? And if you want to draw, if you want to confirm it's swing point or not, you can use pivot high and low. It will help you to identify swing point. Pivot high and low, pivot points high and low. Okay. You go back here. 3, 3, 3, 3. Okay. You see it? High, low, higher, low. So this is swing point. Got it? You can identify from the indicator as well. So the basic point of swing point is if this is low, right? Then it will have two higher lows. On the say this side, higher low, and higher low, higher low. Got it?
okay.
Higher low, higher low, higher low, higher low. And this is the lowest low. Got it?
Right.
Yeah. I think you know it, right? How to identify. Is this a swing point? No. Why? Because this higher low and this low is here, lower than this low. This is not a swing point.
Yeah.
Got it? But this is swing point, this is swing point. This is swing point. You can easily see it. The swing point will have this kind of shape here. It will turn like this. You see it?
Yep.
Yeah.
Okay.
Even the zigzag can also identify. If you have a zigzag line, you can also identify. So any swing point indicator will be able to identify it. Okay. Okay. So we draw this line. We have this one here. We take the short trade and we exit it. Now we know the price has reached this overnight area and has made what? After this, when the price breaks through it, this becomes what? Spring plus key reversal. Am I right?
Yes. Correct.
Okay, now spring plus key reversal. We have taken this trade. If you don't want to take this trade, it's up to you, but I would take my trade. Okay, but the bias I want to tell you is still long. Okay, so if I want to take this trade here, what I'm gonna do, I'm gonna place my trade here. Stop loss should be below here. Okay, and I will drag it and target 2R. This one here. So this is the first target hit. Okay, all right. Now what you did, you exited right over here, right?
Yep. Correct.
All right, on the AR. But at that point, you did you get a full 2R?
I I used the Fibonacci retracement on
Yeah. You can,
the key
or you can
reversal.
use a 1 minute time frame to further redefine it. For example, what I do, it's better to have two screens at one point. You know, at one point you are seeing a 3 minute time frame, at other screen you are seeing the 1 minute time frame, so that you can pinpoint the exact entry. That's one thing. There's nothing wrong with Fibo, but if you want accurate entry, for example, here, okay, the price returns back, makes a spring, key reversal, this spring and KR, this is very, very easy, right? Now, if you take this entry on a 1 minute time frame, stop loss right over here, entry right over here, go to the 3 minute time frame. Now you can see we get a good R. Okay, 2.63 R. All right.
Yeah.
Okay, and if you want to do the Fibonacci technique as well, that's also fine. On a key reversal, this Fibonacci technique essentially works on a key reversal actually, when you have this wrong key reversal bar. Okay, then you use this Fibonacci technique. I think you know about it, right?
Yep. Yep.
So you draw from here to here, this 150, long position from here, stop loss right below here, 2R. Yes, that's also right. Okay, fine. Okay. And if you don't want to use the Fibonacci, if you use this one, then that's also fine, but you have to take a longer trades, 2R maybe, targeting last high. The price will take little longer to reach your target. Okay. But anyways, whatever techniques you use, okay, all techniques are fine. When this is key R, spring, the price comes back and tests this region and gives us another key reversal. Now, on this key reversal is smaller than this one, right? So you don't need a Fibonacci technique in this key reversal. Got it?
Yeah.
And there are key reversal, this key reversal, this key reversal. There are 3 anti techniques. Four anti techniques. One,
For
if
this
you miss
one,
this one, yeah, got it. 2R. Yes. Okay. Placing my stop loss just below this one, this last low of this one. Yeah, what are you saying?
yeah, for this one, I took at the bar on the left with no demand. Sorry, no supply.
This one,
Took that entry on the left.
this one,
Left, 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 left.
here, here,
Yeah, 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 yeah.
yeah. Here, even if you take it, you need to still put your lows here, right? Below here.
Yeah, correct.
Yes. Okay. That's also fine. Okay. So there are multiple entry opportunities. This one, this one. So this is essentially test of spring. Okay. You have this entry. You have this entry. You have this entry. You have this entry. Right? You have this entry. You have again this entry. So multiple entries here. Okay. Now, as you broke through this oversold, mini oversold is complete over here, and you broke through it, and then it come back here. All right. Now here, what do you have for London Open? Now the price again has re-entered after getting oversold. You can see. Can you see? After getting oversold and selling climax and getting back into the channel, the price got back into this overnight high and overnight range and broke above through. So what kind of, when it breaks this overnight high during New York Open, before New York Open, what does this move signify? Increasing volume, breakthrough it. This is JAC, right? And now, of course, what happened? The price starts doing what? The price starts doing what here?
Build up.
This one here, this one here. This is reaccumulation, right? London opens at what point? Right at this point. A 3-minute time frame, and see if we can adjust it. So this one here, and this one here. So London open at what point? At this point. Oh, sorry, New York Open. At this point. Okay. The price went up. So this becomes a spring. Am I right? This whole section becomes a spring when it goes up. And then the price tested this region. Tested this region with what? No demand. And just the news came out. So obviously you have to just take your trade, put your SL right over here. Okay. And capture this whole move to the upside. Got it?
Yeah.
And now once again, the price at 9 does what? What this move is called? This entire move, starting from here, key reversal, jump across the creek, LPSY, then again jump across the creek,
LPS.
and then LPS. Okay. And then the second entry at 9 a.m. over here. What does it tell you? The price kept on going up. Am I right? Now we don't have an entry here. The price went up. Test this region on what?
No supply.
No supply here. Here as well. So we got multiple trade
Yes.
opportunities, right? One is here, placing us SL just below the low, right over here, 2R. That's it. Simple. Okay. And then here again. That's it. Now this one here again, there's a news and it changed the direction actually. Okay. Now you're done with your trading. Okay. You're done with your 2R. Then there's another news coming at around 10 p.m. your time. And you see the price did what? What did the price do? Can you tell me what kind of structure is this?
V bottom.
No, this is like corrective wave becomes larger than the impulsive wave. Am I right?
Yeah.
This is distribution, right? Type of distribution, obviously. So this is, and there are high volumes. You can see evidence of high volumes on here, evidence of high volume on top. And then we have this one, the price. Okay, the corrective wave becomes larger than, and sudden acceleration to the downside. Okay, everything is here. Okay, and then the corrective wave becomes larger than the impulsive wave. So this becomes what? Buying climax. Right? This becomes what? AR. The price did what? Price goes back, makes another attempt. Okay. Okay. High volume bar again. Lower than this bar, of course. Lower than this bar. Okay. Lower than this bar. Price breaks again. Okay. All right. Price breaks again. Now, if you go to the 1 minute time frame, you can find out more accurate opportunity. What is this opportunity here? Effort versus no result. Key reversal bar. Am I right? You can take your entry here. Right? SL right over here. Go to the 3 minute time frame. And now you have an opportunity to ride all this move to the downside after news. Last low, 4.91. Got it?
Okay.
Okay. And then, of course,
I don't really understand the buying climax part there.
this one.
Yeah.
See, we must have an evidence of high volume, which is here. We do have an evidence of high volume here, right? High volume in the past as well on the top. All right. And then the market. And then what happens? The corrective wave becomes larger than the impulsive wave. All right. And you see the volume here to the downside also increases. Right? So this becomes buying climax because corrective wave becomes larger than impulsive wave. Am I right?
Yeah.
So the swing high of that impulsive wave becomes buying climax. Got it?
Okay.
Now this is the region where the test would occur. And you would test this region, go to the 1 minute time frame, or even this one again. We have another attempt of buying climax here. Second attempt. Okay. But on a micro scale, if you go to the 1 minute time frame, things have become much more clear as we can see the evidence of effort versus no result over here. Can you see effort versus no result here?
Yeah.
Effort versus no result, and then key reversal here, both on high volume. And then you can take entry here, place your stop loss above, and then go and ride, and the price would come back to this region. Okay. Now, as the price breaks through this, what happens? Once the price breaks through, is what follows through? When the price reaches the AR here and breaks through this AR region, then this becomes what?
FTI.
FTI, and this would become redistribution. Am I right? Right? Redistribution, I can take your entry. Okay. To the downside here. All right. All clear?
Okay.
Okay. This was, so what was your mistake then? I think you were fine, but this was just an additional entry which you could have taken. That's it. Now, when you are going for the real money trading, right? Okay, you are trading for a profit from real money is online on the line. Then you don't have to worry about if you take a loss. You know, you will have an opportunity, because it's not like because I can take a loss here, right? This can be a losing trade, but as I know that my bias is still bullish, okay, I can write this. I can re-enter and write the opportunity. Got it?
Yep.
Okay, that's what you have to keep in mind. Okay, it's not like you will not lose any trade. If you lose it, fine. You can check the bias again. If the bias is on your side, you can always re-enter and make up for your lost trade. But always place loss, stop loss. Always do the correct position size. Never risk more than 1% per trade. That's very important.
So most important is to set the SL, but the TP maybe you can just wait first, something like that.
No, SL is the most important. Okay. The TP, yes, the first initially you go for 2 hour. What I'm trying to say that, for example, you enter a trade, you could not do the right entry, okay, or the market just hits your entry. But you know, okay, what happens that, for example, let me give you an example. For example, I just saw this opportunity and I say, oh, this is a line. I can draw this line. And if I enter over here, let's suppose I just be in a rush, right? I was in a rush. I just enter my trade over here, place my stop loss here, going for the upside, and the price hit my SL, right? Let's suppose. It's okay, fine. The price hit my SL and then came back and tested. Now I find another opportunity to go up. Am I right? So I can make up for
Yeah.
the lost trade.
Yeah, correct. This is where I got my loss back.
Yeah. So you said that, okay, it's sometimes it's very hard and challenging when the real money is not. It's not about real money. You either have to follow the risk management very, very accurately.
Okay.
Yeah. For example, now let's go for Thursday one. Let me call you back again, okay? Because the video is about to stop, okay? All right. Then go for the next one. I'm calling you again on the Zoom, okay?
Yep.